Scooter here, owner of Van Scooter Insurance Agency. Thanks for checking out my video blog. Today I want to talk to you about when is the last time you reviewed your homeowner's policy. I had a prospect call me this week. It's a very common scenario that you see a lot. They bought their home over 20 years ago. It was required to have insurance at the time, so they purchased insurance at that time. Their insurance was paid through their mortgage company, so they pretty much forgot about their homeowner's insurance. It was something that just happened every year. They knew they had coverage. They got copies of the policy every year, but they never really did anything with it because they didn't have to write that check out themselves. They just knew that it was paid as part of their mortgage payment. So in this case, unfortunately, we found that people were drastically underinsured. Over 20 years ago, I don't know how they came up with the number, but they insured the house for $150,000. Maybe that was adequate at the time, but today, at today's dollars, it's not. Once we reviewed the property, we realized that the market value of the property was $250,000, and the replacement cost for the property was over $400,000. So they had a potential $250,000 gap in their insurance. So that's why it's important to review your insurance. I recommend at least every 5 years, because on the flip side, this couple was underinsured. I've had some of my clients that were overinsured. Because every year the insurance companies will automatically increase your homeowner's insurance by the rate of inflation, whatever they determine, 3, 4, 5, 6%, and they automatically tack it on every year. So over a period of 20 years or 10 years, that can really increase the amount that you're insuring your house for. So that's why I recommend at least every 5 years having a new building valuation done on your home to see if you can actually reduce that amount, which I've actually done for a number of my clients and been able to save them some money. So, in the first scenario where you're underinsured, you have the potential gap if there's a loss, but you also have this, what I call this hidden deductible in the policy. Everyone usually knows what their deductible is. It's stated on the policy, $500 or $1,000. But if you're underinsured, you have a hidden deductible. And what that is pretty much every homeowner's insurance policy requires that you insure your home to at least 80% of the rebuilding cost. If you don't meet that requirement, they're essentially going to penalize you for it. So if you had, say, a small kitchen fire at your home, what they're going to do is they're going to determine the damage that's at your, in the kitchen that's going to cost to repair it, and then they can do a calculation of the total rebuilding cost of your home, and they're going to compare it to what you're actually insuring your house for. If it's less than 80%, they're going to essentially depreciate that payment they're going to give you. So if it's a $20,000 claim to repair your kitchen, they're going to say, well, the kitchen was 12 years old, so maybe we'll give you $10,000 of that $20,000. So essentially, you're going to have to kick in the additional $10,000 to put your kitchen back to the way it originally was. So that's the hidden deductible on the end if you're underinsured. And the worst case, and you're overinsured, obviously you have the protection that you need, but you're just paying more than you need to be. And that's not what we want you to do either. We want you to have the right protection at the right price. So if you haven't looked at your homeowner's insurance policy in the last 5 years, give us a call. We'd be happy to do it for you. And remember, don't be fooled by our name. We insure more than vans and scooters.